Hey folks, Dan Frio here with your closing bell for July 30th, 2025, aka Fed Day. So what we're going to talk about in this video is the Federal Reserve. They came out and did exactly what we thought they would do, and then all of a sudden during our live event, the bond market started deteriorating. Interest rates went up, the stock market went down 300 points. So what exactly happened, and why did these things go up when the market should be going down? That's what we're going to focus in on today's video, folks. So my name is Dan Frio. I actually do this report twice a day so you guys can understand what's going on with these and the whys behind it. Because if you're watching this video, most likely you're looking to buy or refinance. So I'm actually a federally licensed mortgage loan officer, licensed in all 50 states because I work at a federal bank. And we have a slogan here. It's one application, one credit pool. And we're going to compare your loan and rate with over 30 different lenders. Now, how do we do that? I'll give you that information at the end of this video. You're here for these things. So let's get to it. So the Federal Reserve came out today and did this. Well, they did this actually and didn't do anything with rates. Right through here, they continued to keep rates, the federal funds rate, the rate they control, at 4.25 to 4.5. So what the headlines look like right through here is this: a divided Fed holds key interest rates steady, defying Trump's demands for aggressive cuts. But there was dissension in this, and I think it was one of the only times the Federal voted 9-2 to do that. And I think, like they said, normally very uncommon for two people to dissent. So that's what they did. They came in and they said, we're not going to do anything with rates. So when we have our live event, what we were doing is I was watching it, and I was watching it a little prematurely before the live event, and I'm like, all the data that he's giving us is basically right on point. Let's get over to see what he talked about today. So here's the federal funds rate. This is the rate they control. But he went meticulously through all these, and he even went through this number in his notes. Well, this number just came out today, so it got into his notes just today. So here's interesting. He's saying inflation rate now is at 2.3. It's elevated from where we want it to be. However, if you really dissect his speech and his comments, he says we still have a long-term projection over 2 years, even with tariffs, of a 2% inflation rate. So he said, right now, that's not our concern, but there's still things coming in on tariffs that we just don't know, and it could play, a role in these. But they don't expect inflation to jump up any substantial amount anytime soon. That's number one. Number two, he said the jobs numbers right now that are starting to show a little bit of a cracks in the foundation is their main concern at this point. So now the markets are going to be focused in on this. Well, he continued to say, well, the unemployment rate right now is 4.1, which is historically at a low. So we're going to have to watch this because it sounds like this, and now what the markets are telling us, unless the job market really starts to deteriorate, they might not cut rates. I'll give you my comments on that in a second. But let's get over to this right through here. We got the economic calendar coming in. And now here's the interesting piece. We're getting data now tomorrow, not from ADP today. We don't really trust those numbers. But we're getting information tomorrow and Friday right in the wheelhouse of the unemployment or the employment numbers. So if you go to the economic calendar that we have for tomorrow, we have initial jobless claims and continued jobless claims. So these people getting jobs back, that's what we're going to focus in on. Then we have the PCE. This is, did you recognize this this word or this phrase? Well, it's right through here, PCE. So we're going to get that tomorrow as well. So let's go back to the calendar. So we're going to get initial jobless claims, continued claims, the PCE. That's a huge piece of this equation. Then on Friday, we're going to start getting the how much people are earning, the non-farm payroll, and the official unemployment rate. So this is also going to basically just give us or finish the week with all the information the Federal Reserve wants to fill the blanks of this. And if they don't see a deterioration in the jobs market, it looks like they might not be cutting rates anytime soon. So let's get over, here's where the market's reacted. If you go to the CME FedWatch tool, they just came out and told us what they're going to do today. If you scroll down, here's what's happening. Right now, remember there was a 65 or maybe a 70% chance that the Federal Reserve was cutting rates in September? Well, now here's September, and now it's under 60%. It's at 55%. So now there might be the thoughts of maybe no rate cuts at the next meeting. Well, a lot of that data will be filled in tomorrow with the economic calendar that we have filling this in. Now, there will be reports from here to the September meeting, so they're going to take all that data into effect. But what the markets are going to be focused in on is the data right through here. They want to know the unemployment rates, and they're going to get that Friday, and some little bit of tidbits on that tomorrow as well. So be focused on what's going to go on tomorrow and Friday when we're looking at jobs and the unemployment rate, as well as the PCE. That'll give us the direction on where rates are going to go tomorrow. So now what we did today is I was just speaking with Alan, and we locked in everybody prior to the meeting because we thought that they were not going to cut, and we thought there might be some deterioration into the markets. So we didn't think it was going to go down this much, but we thought that we wanted everybody to be safe, locked in, because we didn't see, okay, if rates go up, they're going to go up fast. If they come down, they're just going to trickle down gradually, and that's what we wanted to protect our borrowers from. So that's what we did. So my name is Dan Frio. Like I said, come back tomorrow morning, and we're going to go over what the unemployment numbers look like and a whole slew of other economic news. Now, let's get over to that thing I was talking about. One application, one credit pool, and we're going to compare your loan with over 30 different lenders. Now, how do we do that? And what do I mean by compare? What are you looking for if you're out there looking to buy or refinance? You were told, well, get 3-4 different quotes, right? Well, it's kind of, that's old time school, but we have a more efficient way to do it. It's kind of like AI. What if you can just go to one system? That's us right through here. So I am federally licensed. So I'm licensed in all 50 states as well as Puerto Rico. So I can work with you guys. I've been doing this for over 35 years. So I'm pretty fluent on what's going on in the real estate. And also now, how do we get you a good rate? How can you assure that you're getting a good rate and low fees? What we're going to do is we're going to compare your loan with what I can get you here at the bank and all 33 other lenders that we have. If there's other programs out there that have lower rates, or maybe programs like this, well, then I can actually be your loan officer and even take your loan to the other bank and be your loan officer during this whole transaction. A little bit confused? Well, give us a call or reach out to us. But one of the programs we have right now is, are you looking to buy a house? Well, this is going to give you up to $7,000 in down payment assistance with no lien on your property, no paybacks, so you don't have to worry about qualifying for these things. So we offer that. If you've already got a rate quote out there and you want me to compare it to the 30 other lenders we have, well, just go to right through here. It's called the Loan Estimate Review. You're going to click that, upload your loan estimate. Now, we want the best loan estimate you have. Make sure you call that lender saying, this is the best one, this is the best you can do because I'm going to shop you around. Then upload it this. All I'm going to ask you is if we can beat them on fees and with the rate, we'd love to have you as a client. If we can't beat you on both of those, then God bless you. You're probably most better off with the other lender, but hopefully we can help you out and save you a lot of money during this transaction. So my name is Dan Frio. Thanks for watching. And here's the best place to go to for rates each day. Just join my channel. If you haven't subscribed yet, you can do that right down over there, and I'd appreciate it if you did. Otherwise, God bless. Have a fantastic evening, and I'll see you back here tomorrow morning. Bye-bye.